If you've been in the market for less than 15 years, you better watch out. What's up, guys? My name is Trey, getting in touch with you from Japan. I wanted to get in touch and share some thoughts for you, especially younger investors who have been in the market for less than 15 years. Right now, at this moment, we're seeing all-time highs on a bunch of different stocks. We got all-time highs or near all-time highs, NASDAQ, S&P 500, Dow Jones, Apple, Tesla, I think Amazon, and a lot of stocks are kind of like really going crazy right now. And on top of that, we have Fed uncertainty going on. We have Warren Buffett, who's always been like, gold is stupid. You buy gold and then you put it in a place and hire people to guard it. That's like the worst investment ever. But now Warren Buffett's going out and buying miners now. Like, is the world going crazy or something? On top of that, we have like all-time high unemployment. We have like the worst economic conditions ever. You can't travel right now. And on top of that, even again, there's an election coming up in the US shortly here. So combine all these things together and we have a big recipe for like a lot of people to get really jacked, especially if you're a young investor. So stick around and pay attention, and I hope this saves you a few bucks. I hope this teaches you something, and it opens your eyes to the realities of the stock market. This has been the best 100 days for the stock market ever, combined with the worst economic results ever. Yahoo Finance put out this article basically in partnership with E-Trade. E-Trade does a quarterly survey on their investors, and in the most recent quarterly survey they did, they found out a bunch of really interesting findings, particularly for people under 34 years old. This survey basically found that young investors seem to have an unmerited exuberance for risk right now. 51% of these young investors have a higher tolerance for risk than they did before the pandemic started. Compared to the other age groups in the survey, this is 23% higher. 34% of those under 34 years old have basically completely abandoned cash and moved into the market. Other age groups in the survey, only about 15% of them have done something similar. So this shows us that a lot more of the 34-year-olds are kind of like, forget cash, this is stupid, I can make so much money in the stock market right now. I'm just gonna take all my cash and throw it in. Also, 51% of those under 34 are trading more now than they did before the pandemic began, and 46% of them are trading derivatives too. Derivatives are basically options, futures, forwards, swaps, convertible bonds, things like that, and that should be alarming for a lot of us for a number of reasons that I'll get into a second. Strangely, only 9% of these under 34-year-olds have had their portfolio fully recover since the big drop in March. Yet, about half of them expected a full recovery within 6 more months. Compared to the other age groups, only about a third of the other age groups were expecting a full recovery within 6 months. So this begs the question, has this been the best 100 days of the stock market ever because there are so many young people who are just so unnecessarily exuberant about the stock market? For those who started investing after 2008, there kind of hasn't really been a huge dip that just carried on for a really long time. And probably actually even before that, now that I think about it. But if you were riding the long, slow bull market from kind of, 2010, 11, 12, up until basically March, and even after March's real quick recovery of the stock market, not of the economy, those are two different things. If you grew up watching that, you probably subconsciously believe that I will make money with stocks quickly and easily, and the stock market never really goes down for that long. And you might also subconsciously believe that there isn't a huge amount of risk involved. One of the really tricky things, especially when economies are collapsing and changing and the whole world is evolving, take it from me, I live in Japan. Basically, the Japanese stock market's been flat for like 30 years. Imagine you put like all of your cash in a stock or an ETF, and then it just stayed flat for 30 years. You'd be like, dude, I should have used that money to like start a business or to do some other kind of investment, something like that. I'm not saying that's about to happen in the US, but what I'm saying is that you need to be aware of some of the risks, and a lot of the red flags that I mentioned earlier, the gold and the Fed and the really high stock prices and the unnecessary exuberance coming out of the youth, these are all red flags that something really bad could be coming soon. It might be a slow meltdown or it might be a huge crash like we just saw. It's all fun and games until somebody gets hurt, okay? That's a phrase many of us heard growing up, and I think that kind of applies as like annoying and like bothersome as that voice and that phrase is. I associate it with like naggy moms. I think it's time for us to maybe consider the fact that like, yeah, everything could fall apart like tomorrow or in the next few months, especially with a weird election coming up. Speaking of that, this doesn't really support what I'm saying right now, but a weird fact I found out, I'll put it up on the screen for you. Generally speaking, on average here, when a new president comes into power, stock market gains are kind of like 5%. When the same party stays in power, stock market gains 6.5%. I'm not telling you who to vote for, just statistics and history, and we're in a time of breaking all of the rules of history anyways. Just food for thought. Super like, I'm actually not telling you to vote for Trump. Just use your own brain and do your own research. But yes, all of this to say, please have cash on hand. Please have cash on hand. Not just like 1 month of living expenses or a half year of living expenses. It might be time to start taking some of your gains and just holding on to them, or trimming down some of your positions, whether they're losses or not, because they may be bigger losses coming up here soon. I'm just saying from my own experience and from the things that I'm seeing, I got out of most things right before the drop in March. Just kind of like a smell in the air that I have. I don't know. I'm not saying like, you know, I can predict everything or whatever. Things might be going fine for another year or something like that. But all that to say, keep cash on hand. Get cash in your hand. Think about it this way. Things crash and go bonkers. Now you can buy things on sale. Or you could even just think about it, even if you don't want to invest in stocks in the future, you can just lose less money because the stocks you're holding aren't getting hammered. So I know many of you watching are younger investors. What do you think about all this? Is it interesting? Is it eye-opening? Is it scary? Is it exciting? And for those of you who aren't younger investors, a lot of you guys have been in the stock market longer than I have. What do you think about this? Do you agree with me? Do you disagree with me? Let me know your thoughts. I want to have a discussion with you guys down in the comments section. Looking forward very much to talking to you guys soon. Have a great one.